Welcome to my live market meeting, 7th October 2020. Please let me know using the live chat panel if you are able to see my screen and hear me. I'll continue. I am Sagar Nandi. I used to work in IT. I am now swing trading stocks. Retired now. I am trading using the Q systems and techniques. This is my traders forum, sagarnandi.com. You may contact me using my email ID tradingprofitably@gmail.com, my YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. I regularly share live market and stock analysis on these channels. They are open to the public. You are most welcome to make use of them. Thanks, Mike. Disclaimer, I am not an investment advisor. This demonstration is for educational purposes only. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I have not prepared for this session. We'll look at the market together. These are the systems I use. For technical analysis, I use Q Elite running on TradeStation, Q Global, Q Finder running on MetaStock based on Zenith or Refinitiv data. For fundamental analysis, I use Q Vital, sector industry rotation analysis, Q Edge, and market level index analysis, Q Index. That was the last slide of my presentation. I'll continue with the live system. Let's start with the global market study. Australian Market Index AXJO, looking at it using the weekly daily at a glance template running on Q Global on MetaStock. Australian index was moving inside a range. That range bound move is continuing. However, today's move is bullish because it broke out of the trendline resistance both in daily as well as weekly. The weekly backdrop color flipped from bearish magenta to bullish cyan. There was a high pressure bullish candle 2 days ago. Therefore, for last 3 days, Australian market movement is bullish. It is still inside the range in the daily chart. However, looking at the breakout in the daily and weekly charts, you could look for breakout trades in underlying stocks. Overall, we have to say it is still range bound. What about Japanese market topics index? That is still range bound. Price is near the weekly trendline resistance and somewhat far from the daily trendline resistance. There is no clear signal and it may be safer to stay away from taking swing trades in the Japanese market. It has a memory support and a memory resistance, both range bound. Chinese market CSI 300 index, range bound. It was so and continuing to be the same. It has the trend line support and resistance. Of course, one thing to keep in mind that Chinese market is closed for a long holiday. The last bar we are seeing here is 30th September. Since then, the market is closed. It is older information. If we want to have some representation of the Chinese market, we may look at the Hong Kong market, Hang Seng Index. Earlier it was dropping. However, last couple of days it is starting to go up. In the daily, it is still in a downtrend. It has trend line resistance and lower high, lower low. Therefore, even if price is recovering from below the lower boundary level, there is no buying opportunity in Hong Kong market. Last few days are bullish. And here the last day is today's day. So today Hong Kong market was open. It was bearish but recovered this week. Today is Wednesday. Wednesday Hong Kong market is already closed. Now Indian market, Nifty 50 index, Nifty 50 recovered for 2 weeks. In the last webinar I mentioned, after this pullback I was waiting for price to go up and then till down. If such a till down happened and if the weekly remained magenta, that could give a go with flow short trade setup, trend following short trade setup. However, the till down in the daily chart has not happened yet, and the weekly has recovered so much that the weekly backdrop is now bullish, cyan color. Therefore, I am not expecting to get any trend following short trade anytime soon. For the go with flow setup, we need a bearish weekly candle color magenta. That may not come anytime soon. It is looking bullish. Here also price is trying to break out of the daily trend line and weekly trend line resistance. However, daily is already far above the recent low. It is overbought, shown by the stretch band indicator, overbought for 3 days. It may be not the right time or too extended to buy Nifty 50 now. What could be the possible trade? If price reverses from here, we may look for a bounce short setup. Probably not in Nifty index, but in individual stocks. If it continues to go up, we may have to wait for it to pull back, probably come to the same trend line resistance, which could work as support at that point, and then wait for price to go up again, giving a low risk trend following go with flow long setup. Right now there is no trade setup, though it is looking bullish. And UK market FTSE index, this is continuing to remain inside a range bound by resistance and support trend lines. The global markets are continuing to remain inside range, or it is recovering, starting to go up for Australian market, for India market. That is an improvement from our previous webinar study. That time it was more range bound or toppling over. Now it is more range bound or going up, recovering, not in a position to give a buy setup, but recovering. More bullish than the last webinar. What about the USA market? Yesterday there was a news that the USA government may not go ahead with the next coronavirus related relief fund. That seemed to drop the market. Let's look at the USA market using the ETFs first. After that we look at the futures. This is S&P 500 ETF SPY. Now I am using Q Elite running on TradeStation. In the daily, price recovered from below the lower boundary level. I was waiting for a possible short setup when price was here. Why? Because the weekly was and still is bearish in color. Weekly shape is also bearish now. If the daily gave a magenta candle, that could give low risk shorting opportunity. That was what I was waiting for, but that signal has not come yet in SPY, because the weekly, though the weekly is bearish, but daily, though the shape is bearish, the color is not magenta yet. there was a reversal candle yesterday and price fell with high volume, though not very high volume. Very high volume would have a dot, extreme high volume would have a cyan dot. Nasdaq ETF QQQ. This is the only market ETF where the daily changed color to magenta and it reversed precisely from the trendline resistance. In fact, the trendline resistance was there from market open yesterday. By looking at that, you could take a short trade in QQQ. I mentioned this technique before. If there is a trendline resistance in weekly or daily, you may then switch to fine-tune intraday chart and look for a shorting opportunity just at the point price is going down below the trendline resistance. And I would like to take such a short trade provided QQQ was the weakest market ETF yesterday. That was indeed true. I kept an eye on the market ETFs using the fine-tune chart. The four market ETFs IWM, DIA, QQQ and SPY. QQQ dropped below early range low at this point. However, it had a lower tail. Next candle also had a lower tail. Price went up from there, and when it reversed from the green pivot resistance right at that point, I shorted QQQ. And if I align the multiple charts, you may now see that IWM small cap ETF was continuing to go up. DIA also started to reverse. QQQ started to reverse and SPY started to reverse. IWM was the strongest yesterday. Therefore, I could short either DIA or QQQ or SPY at the top. And at that time, I was using 5-minute interval to fit all the ETFs on one screen. Currently, I am showing using 10-minute interval. However, for real life trading in the morning half, I use 5-minute interval on fine-tune chart. And I shorted QQQ, not DIA or SPY, because in the daily chart, and I switched the interval to daily, only QQQ had the trendline resistance. IWM also had, however, IWM was the strongest. It was going up at the point the other three ETFs gave a short signal. Therefore, my decision based on the Q technique was to short QQQ. I shorted the call and bought the put, and my stop was just above the green pivot high. When price came here, I could book profit but I kept watching the sharp downfall at the bottom when it was starting to reverse on all the ETFs. I covered my position here. I closed my synthetic stock position. Therefore, my stop was only this much. Risk was this much, and my reward was many times more than the risk. That is the way you can use the fine-tune chart and the daily, weekly trendline support or resistance to take very precise entry. If the price continued to drop after that, I could hold partial position, but it didn't, and I closed my position here. Later on, it dropped. That was at the time when the news came out that the USA government may not go ahead with the next funding for coronavirus related relief. But that was after the fact. I would not know about that. I closed my profit with a very high profit, closed my trade with profit, very high profit relative to risk at the lower point. That was my short day trade in QQQ, looking at the daily trendline resistance and reversal from there. Dow Jones Industrial Average ETF DIA. This also reversed yesterday. High volume but not very high volume. Again, the weekly backdrop color is bearish, but the daily didn't turn bearish in color. And Russell 2000 ETF was the strongest. Remember earlier I was looking for a short position in IWM using fine-tuned chart based on trendline resistance. Let me switch to the other template that shows the historical trendline resistance. In the last video I mentioned when price was at this point that it was near a trendline resistance. So if it reversed from there, I would take a short trade using fine-tune template, just like I took a short trade in QQQ yesterday. However, next day price opened above the trendline resistance and continued to go up. So that didn't give me any shorting opportunity. Then I saw there was another trend line resistance and I was waiting for price to reverse from that trend line resistance. But that also didn't happen because yesterday price opened above that trend line resistance. And that was yesterday. Yesterday QQQ was the weakest. I used the trend line resistance in QQQ, take a short trade instead. Now IWM reversed from the trend line resistance, at least for now, both from the weekly and daily trendline resistance. That is one reason why we don't want to initiate a new long position near trendline resistance. It can reverse. Let me change the template back to the full entry template, daily chart. We saw QQQ was the only ETF where the daily color is bearish, magenta, and you may see IWM is the only ETF, market ETF, where the daily color is still green, bullish. It is already significantly above the recent low, therefore I will not try to take a new position in IWM at this point. Yesterday's reversal was news driven. This reversal that happened in all the market ETFs, sharp reversal. However, if we look at the market futures now, let's look at S&P 500 futures, E-mini futures, ES. Today in the overnight market, the futures is recovering. Already the S&P 500 futures is up by more than 25 points. If it can go above yesterday's high, that will be certainly bullish. If you look back for several days, price is moving inside a narrow range. If it breaks out of the range, that may give a bullish signal. The E-mini S&P 500 futures weekly color is bearish. We may not want to take a long trade in S&P 500 itself, but we may look for strong fundamental stocks to buy if it breaks out. Which sector to focus on for buying? That we can identify from QH. This is the latest version of QH, the sector industry rotation analysis tool, and let me highlight the changes, enhancements. At the top, you have the sector advanced decline, industry advanced decline, and stock advanced decline. Currently, it is showing 1 day period because market is closed. During market hours, this will change to real time. So this entire top panel will show real time change. And this bar chart is also going to show real time percentage change of the sectors versus previous day's percentage change. Now market is closed, that's why the real-time percentage change is showing no data. The left side of Q edge is now going to show real-time change, and that is very useful because if you watched this yesterday in the morning session, this was all very bullish, and later on you can see at the end of the day yesterday it turned bearish, and you could see that happening in real time. On the right hand side now you have the sector industry stock advance decline for 1 day, 2 day, 5 day, and if you scroll to the right you also have 10 day and 1 month. What does it show? If you look at the sectors, 1 month is mixed, 10 day is bullish, 5 day is also bullish, 2 day is also bullish, yesterday was bearish. Now if we have a bullish day, then the uptrend will continue. The same picture is there for the industry advance decline and stock advance decline also. Therefore, if we have up move in the sector industry stock today, that will resume the uptrend. This is the market breadth inside. On the other hand, if it goes down today, that may give low risk shorting opportunity. Why? Because I showed QQQ is giving a possible go-with flow shorting opportunity. Of course, keep in mind in the overnight market, QQQ is already up, but if it continues to go down, then tech stocks may give low risk shorting opportunity because the stop will be very near yesterday's closing price and the reward will be bigger than the risk taken in the trades. Let's look for some sectors where we may consider buying first because in overnight market it is going up, and the news that drove the market lower yesterday, that news is somewhat negated by another announcement from the US president that he is open to some form of relief being given to the coronavirus affected people. That may be why the futures are going up, but I don't build too much on the news. Just look at the sector fundamental and the technicals to decide. We may look for both shorting as well as buying opportunities. Before looking for such setups, let's look at the finder picture. The finder weekly picture, keeping in mind the week is not over yet, the weekly picture is still very bullish. Though yesterday the market reversed, for the week 83% of all signals are still bullish. As expected, reversal signals are more bearish, but trend continuation and strength signals are also bullish. This is the weekly picture. It's still bullish. That's why if market goes up, S&P 500 futures can break out of the range. That may give nice buying opportunity. Daily picture for finder, we expect that to be bearish because of yesterday's reversal, and you can see 97% of the reversal signals are bearish. Very strong reversal yesterday. Of all the signals, 68% is bearish. Not so bearish as the reversal signals are showing. And strength signals are actually bullish because of large number of gap up open yesterday. Trend continuation signals are bearish but not so much. 63% of trend continuation signals are bearish. The Q edge picture, the finder weekly and finder daily picture, together they are telling that the low risk opportunities now may come both on the long side as well as on the short side. If we are looking for long opportunity, let's look at the sector scorecard from Q edge, where we may look for buying opportunities. Yesterday's strongest sectors were utilities, consumer staples, real estate, defensive sectors. Yesterday, if we consider it was that news driven sharp down move, we may look for a longer period, let's say 5 days. And for moving 5 days, we see financials is the strongest. And earlier, it was very weak. This is giving a possible turnaround buying opportunity, and I am always interested in looking for turnaround candidates, both in terms of fundamentals as well as in terms of sector industry rotation. So I may look into financials. And before looking into that, let's look at real estate. Remember earlier when real estate was still very weak, just on that very day that real estate started to turn around, I shared this stock buying idea, unit COP, ticker symbol UNIT. Let's review that stock again. And I'm going to change the daily template to show the historical trend lines. It's useful to look back and see how we are entering the trade, booking profit, and managing the trade. I first shared that idea on this day and said we could buy it if the stock broke out of the trendline resistance, which happened 3 days later. If we bought it as a breakout setup on this day, then we would book profit, partial profit at the next trendline resistance. This is what I discussed in the last roundup, last video, and I mentioned that there was no reason to exit the full position. We could continue to hold the partial position, and you may still continue to hold that partial position because we saw yesterday real estate was strong. If we go back to QA, real estate was relatively stronger yesterday, one of the three best performing sectors. That is how we could decide to buy a real estate stock, strong fundamental stock, right at the time it was breaking out, booked partial profit and continuing to hold partial position. And now we may try to do the same in financial sector. Let's drill down into financial stocks. I can go to the financial industries or I can directly go to the stocks. Let me choose to go to the stocks directly. These are the financial stocks in S&P 1500. I'm going to sort them by performance yesterday, and you can see several stocks went up by more than 1%, though the market was down. Several of them also went up by more than 2%. Now let me use the latest version of QFinder to look up these stocks that went up by at least 2% yesterday, financial stocks, and see if they gave a trade signal. You could of course look up the trade signals yesterday by using QElite. How? By clicking the grid icon, here the grid icon, that would copy the ticker symbols and I could go to QElite, paste the symbols into the radar. That will show me if any of these stocks, financial stocks that went up by at least 2% yesterday, are they giving any kind of Q signal, buy signal. And we can see now several of them are giving breakout signal. One is giving trend following, possible go with flow signal. Two stocks have high bullish pressure. Several of them went up with high volume, very or extreme high volume. Here, using Q sonar radar on trade station, you can see yesterday's trade signals. Radar works in real time. If you are not using trade station, you may now look for today's signal, and not only today's signal, yesterday's signals or even this week's or previous week's signals using QFinder. If you have run QFinder already, like I have done, I can come to Q Edge, highlight the stocks in any way I want. Again, I am selecting the stocks, financial stocks that went up by 2% or more yesterday in spite of having a sharp reversal in the market. And then there is a new button for lookup in Finder. If I click that, it is going to go to QFinder and show me possible signals. And here I can see for the stocks I selected, there are 3 breakout signals, 1 trend following signals yesterday. That is the orange color cells. The green color cells represent previous day. So I can see this stock gave a bullish flow 1 day earlier. Same was true for this stock. And the blue cells show this week's within the week. So I can see there was bullish flow in several stocks in this week. There were several bullish reversals also in this week. And the light gray and dark gray will give us the signals from earlier periods. The numbers indicate how many bars ago that signal came. So this is very useful in reading a chart's history, not only today's signal but previous day's signals. If I want to see the stocks giving maximum number of signals yesterday, I can sort by the cumulative signals yesterday. I could also sort by cumulative number of signals over last 2 days or for the week. I can see if you look at cumulative number of signals this week, Green Hill is the strongest and it yesterday went up by 3.59%. That may have already gone up, but let's look at it. I'm going to close the existing charts on Q Global. Come back to Q Finder. Let's look at some of these stocks. Green Hill, GHL. There is a question, can Q Finder be live? Q Finder, the data that we are seeing in Q Finder, that comes from the Q Global scans. The Q Finder view itself cannot be filled up automatically, but we are able to run the bearish finder and bullish finder in real time. Usually one would run either near the market close or just before the market open. No point running it throughout the day. So that is what I do. I may run them in the morning session, let's say 9:35, 9:40 a.m. or I may run it near market close 3:30 p.m. Eastern Standard Time. And then I do the analysis that I am doing. There is no need to keep on running it throughout the day. The best trading opportunities using Q technique, they come either in the morning session or just before market close. You will find this very useful, the new Q Finder enhancement and the integration with Q Edge Index and Vita. I'm loving that enhancement. Coming back to GHL, it reversed with a bull release signal from the trendline support 3 days ago. If you were watching the stock and we have not checked the fundamentals, if the fundamentals were good, you could buy the stock at the point of the reversal. I would not buy it yesterday because it had a long upper tail. And also it didn't give any Q signal. It was not there in Q Finder, no orange color signal other than a gap up move. Once I analyze a stock, decide not to do anything, I want to delete that stock from Q Finder. That was a stock where I was looking at the maximum cumulative signals for the week. Let me now sort by cumulative max number of symbols yesterday and I can see 3 breakout opportunities. One of them also has a bullish flow. So let me look at the one with both bullish flow and breakout opportunity. Yesterday, Donnelly Financial, DFIN. Sorry, I should put my cursor on the chart application. Go back and open the chart. Here it just broke out above the trendline resistance with a bullish flow. However, it has an upper tail. I would not buy it yesterday. Instead, here also, when price came to the trendline support here or here, that could be the low risk buy point. Not now. Now price is above the upper boundary level and also near a trendline resistance. Technically, it has broken above the trendline resistance, but barely so. Again, above the upper boundary, I would not like to buy it yesterday. Close that chart. Delete this stock. Let me look at the other 2 breakout opportunities. National Bank, NBHC. It broke out of this trendline resistance. However, there is another trendline resistance. Yesterday closed with a long upper tail. That is because of the market sharp reversal. It still closed higher compared to previous day. However, it has an upper tail, so I would not buy it yesterday at market close. And the next stock, again, this is Trustco Bank, TRST. It broke above one trendline resistance but just below another trendline resistance with upper tail. I would not buy it yesterday. So what I did, I looked at several financial stocks that went up yesterday but didn't find any buying opportunity. Therefore, I looked at the financial regional banks ETF, KRE, and I shared a post on the forum. Let's look at the forum post. When I shared the post yesterday, this was at 1 p.m., 1:05 p.m. Eastern Standard Time. You can see the market was very bullish. 100% of sectors, 95% of industries, 84% of all stocks shown in real time during market hours, they were bullish. And I noticed financials was the best performer at that time. At that time, I looked at several stocks just like I did just now and didn't find many lucrative buying opportunities in individual stocks. However, the regional banks industry was very strong, getting stronger. So I was interested to buy. I could not find any stock that is giving me low risk buy setup using Q technique. So I looked at the regional banks ETF, KRE, and that was breaking above trendline resistance in both daily and weekly. This was the first bullish backdrop candle after 1, 2, 3, 4, 5, 6, 7 weeks. For last 7 weeks, the backdrop was either neutral yellow or bearish magenta. Then we have a very strongly bullish shape and bullish color candle as of yesterday when I shared it. So I thought of taking a long position in KRE, but remember I shared it at 1:05 p.m. So I would wait for the market close to confirm the breakout, and at the market close carry ended like this. It pulled back below both the weekly and daily trendline resistance. Therefore, if you are buying a stock or ETF near market close, you wouldn't buy it as a breakout trade yesterday. However, if you were looking at carry near the market open, then you could look at its fine-tuned chart. And let's do that now. Yesterday, carry opened, okay, let me change to 5-minute interval. Yesterday, carry opened at this point, the blue pivot line, that was higher than the green pivot line. Green pivot line was previous day's high. Therefore, it opened with a gap up. Then the early range high and early range low lines form. After that, it broke out of the early range high. That gave a gap long day trade setup, and that was coming when the daily was breaking out of trendline resistance. So there were more reason to buy carry at this point, putting stop just below early range low. And as price went up, it covered much more than the risk distance. This was the risk in the trade, this was the reward. Following Q technique, one would book at least partial profit when the risk distance was covered. And that would be useful because after the news came out, it reversed sharply. Still, using the fine-tuned chart Q technique, you would end up with a profit in KRE. Trading long, just like in QQQ, I ended up with a profit trading short side. Using the same fine-tuned template, using the trend line resistance or support. In case of QQQ, I use trend line resistance to take a short, and in case of KRE, you could also use trend line resistance but break out from resistance for buying KRE, take a long position, end up with a profit. At the end of the day, we will not consider buying the ETF KRE because it closed below the trend line resistance. That is how trend lines can help us to take reversal trades as well as breakout trades. And fine-tuned template helps us to make those entries precisely. If today carry continues to go up, then you may consider taking a long position. There may not be attractive looking buying setups on individual regional bank stocks. In fact, if you look back, I didn't take a position at that time, but on this day when there was a bullish flow candle and a reversal candle, that was the day several regional bank stocks also gave a reversal candle with a bullish flow. That day you could consider buying the banks, those banks, putting stop just below this range low. And in that case, you could book partial profit yesterday. Or you can try to take a long position today. If KRE goes up, you could use the fine-tune chart so that the risk is minimal. Let's go back to QH sector analysis. Refreshing the data from cache. Healthcare. Healthcare in recent periods is a bit patchy, going up, down. Not sure which direction is the preferred direction for healthcare. Over 2 days it is the strongest, yesterday it is not so strong. Consumer staples was very strong yesterday. However, before that it was weak. Yesterday's signal may be related to the news. If we think so, and if we think it is time for consumer staples to turn down again, if the market goes up today, maybe consumer staples will come down, we may get ready with some possible shorting opportunity, thinking the downtrend or the weakness, sector weakness will continue. Let's look at the consumer staple stocks. I'm directly going to the stocks instead of going to the industries. Now we saw yesterday consumer staples. Let me go back again. Yesterday consumer staples was very strong, but over 5 days it was weak. Over 2 days also it is weak. So if I'm looking for shorting opportunities, I may not focus on 1 day performance in individual stocks. Instead, I may look for the stocks that went down most over either 2 days or 5 days. So let me go to stock. Now I'm going to look for stocks that went down most over 2 day period, not went up. These are the stocks, and there are few stocks that went down by more than 2% over 2 day period, consumer staples. Let me look up their finder signals. And now see, now I am looking for stocks that went down. When I look for finder entries, it is going to automatically take me to the, okay, it takes me to the, there are mixture of uh, signals yesterday, some up, some down, so it took me to the bearish tab. What I wanted to explain that if I just highlighted the stocks that were down yesterday and looked up their signals in Finder, it would take me to the bearish tab. Because the immediate move in the stock is bearish, it is selecting the signals, both the latest bullish signals and bearish signals, but intelligently it is taking me directly to the bearish or bullish tab in Finder depending on the latest move in the stock. Here let me again choose the stocks that went down over 2 day period by more than 2%, and yesterday some of them went up, some of them went down. That's why it has a mixed signal. It may take me to the bearish tab, but I'm going to look at the, sorry, it took me to bullish tab, but I am going to look at the bearish signals. Now I'm going to see the cumulative number of bearish signals over 2 days, or I could do that for the week. I have these two stocks and I can select by these columns also in this manner. So let me select these 3 stocks, cumulative maximum number of bearish signals over 1 week, and now open them with the chart. This stock NUS is at a very high price point. It has bearish shape candle yesterday, doji candle. If it comes down now, it may give a what people call high close doji kind of setup. Yesterday had heavy bearish pressure and bearish pressure U-turn, a bear release signal as well. You may use fine-tune chart to look for very low risk shorting opportunity. There is no trade setup using daily weekly interval, no standard trade setup, swing trade setup using daily weekly. We may look at its fundamentals also before deciding to short. But if it comes down, one thing in favor of shorting is the risk will be very small, but no trade setup right now. I should mention that again. The next stock, MNST. Here 3 days ago it gave a bearish flow. That time you could consider shorting it that day or the next day at market open. Why not that day? Because the magenta candle, the bearish flow candle, ended with a long lower tail. You could take the short trade next day, and that trade would be in profit already by yesterday. Next stock, STZ, Constellation Brands. This stock gave a bearish headwind signal at the very top that was very useful in protecting profit in long positions. Then it came down, gave a magenta flow candle. I have mentioned the first magenta flow after bearish headwind is bearish, may give low risk shorting opportunity. However, the trend line support was there. That support is broken yesterday. Another trend line support is nearby. If at all you wanted to trade this kind of stock, you could use verticals instead of stocks. That way, time would be in your favor. You could use short call vertical to take a bearish trade on the bearish flow day, and you could of course take that same trade when the bearish headwind came. There is no Q swing trade setup in any of these stocks, but what I tried to explain that based on the sector analysis, if you are anticipating a certain move, consumer staples were strong yesterday, but that might be because of the news, and you see it was weak earlier. If you are anticipating it to move down next, then you could look at the stocks, and you would not look for stocks based on yesterday's performance because that was news driven. You would look for weakness over 2 days or 5 days, then look up their signals in Finder. Again, you would not look for orange color signals, not yesterday's signal. You could do that, but the more appropriate will be to look for signals over 2 days or 5 days, and then look for a continuation of the bearish trend. We didn't find any trend except the breakout, but the breakout constellation brands, the short could be taken earlier itself. Let's now try to do the same thing for 5-day period. What were the weakest stocks over 5-day period in consumer staples? There were 1, 2, 3, 4, 5 stocks that went down over 5-day period. Again, I'm going to look for their Finder signals. Sorting by 5-day period, several stocks have signals over 5-day period. Constellation brand I have already seen. Let me choose PepsiCo, Churchill, PEP, CHD, LANC, MNST I have already seen. Before that, I'm going to close the existing charts. From Finder, look at these 3 stocks that are giving bearish signals over 5 days. LANC, it has a bearish flow yesterday, however near trend line support, multiple trend line supports. If those supports are broken, that may give a shorting opportunity. Next, CHD, this gave a go with flow shorting opportunity 3 days ago. You could take that confidently. Now it is already down for 3 days. I would not short it yesterday. I would have shorted it 3 days ago. Remember, that was when the sector was weak. We saw that already from QH, that the sector was weak over 5 days. So that was when this stock gave a go with flow short setup, and you could short it. In fact, you could short it during the day if you ran Finder during the day, or you could check it out using QLE Trader also. Next stock, this is giving a possible trend following short setup, PepsiCo yesterday. The next support is some distance away. Strictly speaking, it is not a trend following short setup because it is range bound. It is not in a downtrend. So if at all you would consider shorting this, you might again use short call vertical instead of shorting the stock itself. The trend following setup is applicable in stocks that are in a downtrend. This stock is not in a downtrend, it is range bound. In a range bound stock, the appropriate Q setup is box setup. Using that, you could try to short at the top when the bear release came, or try to buy at the bottom when bull release came, provided the other checklist conditions were also true. Not giving a proper Q trade setup now. That is fine. I intended to explain that if you anticipate a sector move, in this case bearish, which was stronger yesterday, then instead of looking at 1-day performance, you would look at 2-day or 5-day performance to look for possible tradable stocks. Now let's look at the stocks that went up most yesterday. I am using the insight category. Several stocks went up considerably. Let's look at the stocks that went up by 6% yesterday in spite of having a down day. OMI, this is going up strongly but far above the upper boundary. I'm not going to buy now. Next one, AVNS. This gave a breakout trade setup yesterday. If you ran Q Sonar either on Metastock or on TradeStation Radar, you could identify the breakout in the morning session and then you could take a position. It had bullish pressure as well. It is breaking out from a range. That is a valid trade setup. I am not fond of breakout trades, but this gave a proper breakout trade setup yesterday, especially if you looked at the breakout in the morning session. Later on, we'll look at its fundamentals also. I'm going to keep this stock. FRGI. This is also giving a possible buy setup, a pullback kind of trade setup. This was in a strong uptrend, pullback right to the yellow and white direction lines, and yesterday it went up. Near the end of the day, it pulled back as the market also pulled back, but it gave a valid pullback setup yesterday. If you ignore the upper tail, it also gave a bull release signal. We'll look at its fundamentals also. Let me keep this stock. LQDT. This is now above upper boundary. I will not buy it, but remember the stock that we just saw giving a pullback yesterday. This stock LQDT that gave a pullback setup on this day when it was in an uptrend, pullback right at the yellow direction line and went up with bullish candle color, bullish shape. White direction line was below it. The pullback setup came on this day. That already gave significant profit. DDD, 3D systems, it broke out of one trendline resistance, but there is another trendline resistance and it is very much in a downtrend. Not going to buy it now. Close it. ENDP, Endo International. This also gave a valid breakout setup yesterday. It was in a range, broke out with heavy bullish pressure. Breakout traders might consider taking a trade in that. I will look at its fundamentals also. Let's keep that. GPI is very much above the upper boundary, too extended for me to buy it now. Let me close it. Back to AVNS. Let's now look at these stocks using at a glance template, weekly, daily, and also look at its fundamentals. AVNS, let me use Q Elite. AVNS. The weekly is bullish, daily broke out. Again, I'm not a breakout trading fan, but it gave a breakout setup yesterday. Let's check out its fundamentals. AVNS using Q Vital. AVNS dot what? Oh, no, that is AVNS dot N. Healthcare supplies. Let's check out its industry. Healthcare supplies industry score is strong. Retrieving the peer stocks fundamentals. Give it a few seconds. This stock is of medium valuation. Last quarter earnings growth is negative. The yearly earnings growth was positive. So fundamentals for short-term trading, if we are focusing on the last quarter earnings growth and valuation, fundamental wise it is in the middle. So let's try to find a stock where fundamental is also strong, technical is also strong. Let's close AVNS. FRGI. This is giving a pullback setup, ignoring the upper tail. FRGI. Let's check its fundamentals. Restaurants industry. Let's check out that industry score. The industry is not strong. So we may not look for a buy setup right now unless we see the industry is reversing today, going back to a strong score today using real-time data. If that happens, you may consider buying the stock. Let's check its fundamentals. Retrieving. And after checking this stock, we may close today's session. Let's check out this stock. Taking time. Let me close the MetaStock charts. Sometimes because of internet speed, it is a bit slow, especially when I'm running the webinar. FRGI. Could it be in Q edge? Let's check that out. Yes, it's there. Okay, so we found the fundamentals from Q edge. It is part of S&P 1500. FRGI is undervalued stock. So fundamentally it is strong. The industry is not strong. However, if today it becomes strong, it may give a buying opportunity. And let's check its technicals using at a glance. FRGI. As of yesterday, it didn't give any buy setup. If we look at QLN, if it goes up today in overnight market, it's actually up by 5.6%. Yesterday's close was 9.59. In overnight market, it is 10.13. It's already up by 5.6%. Therefore, it should open with a breakout. The technique I explained for QQQ short trade, the technique I explained for buy opportunity in KRE yesterday. You could use that technique to look for a buying opportunity in FRGI today using fine-tuned chart. And the fact that it seems to be breaking out of the trendline resistance. Of course, you will keep an eye on QH to see if the market is also bullish before buying a stock. That is how you may use now both the TradeStation QLE radar or sonar, Q sonar, or the Q finder now to look up the signals of multiple stocks at the same time. Before even opening the charts, you may get to know a lot of detail, choose the best stocks to analyze with at a glance template, and decide your technical trade. We are at 1 hour point. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in our next session that will be during the weekend, the market roundup. I'll announce the time on my Twitter page. Thank you once again for joining. Have a great week. Keep safe and trade profitably. Thank you.